And Nicholas Poynton has joined me in the studio for business news. Nicholas, you want to talk about new consumer data that shows the gap between the young and the old is widening. Do we need to get into the debate about what is young and what is old?
I think people will be able to work that out for themselves, because today we got the Westpac Bank's measure of consumer confidence. And while the ANZ Bank, they measure this month to month, Westpac does it on a quarterly basis. And given the size and the scale of their survey, it actually gives us a lot more detail and insight about how consumer confidence, how confident New Zealanders are feeling across their age, their incomes, and different regions in the country. So beginning with the headline number, yes, as you would have probably expect, there was a significant turnaround in consumer confidence, given that in the September quarter we saw consumer confidence fall back to its worst level since the 2008 global financial crisis. So it's now back up to 106, still slightly below its long run average of about 111. And we did see over this period a slight improvement in people who expected to be better off financially next year. But as the bank's senior economist Satish Ranchhod, I was talking to him, I asked him what has really been driving this turnaround, and he put a lot of it down to some of these measures that have been taken by the Reserve Bank in terms of its monetary policy. He says that the surging property market, that is giving a lot of people confidence to go out there and spend. People are seeing the values of their properties increase and they feel compelled to go out there and buy stuff. But not everybody is a homeowner, and this is why people who have a house, they've seen the biggest rise in consumer confidence, and that tends to be older people, while people aged 18 to 29, they were the most downbeat in the survey, with many saying their financial position had actually deteriorated over the course of the year. And they were also the least optimistic that their fortunes were going to improve next year. So, and because of the effects of the pandemic, because they're likely to be prolonged, there's going to be no pullback on these forces we can actually probably foresee in the near future that are really driving up house prices. We can probably expect this gap to actually widen and be further exacerbated. But the data also gives us a bit of a breakdown of what is happening across the regions. Confidence in every region has increased, but it turns out that the Hawke's Bay and the Gisborne region was the most optimistic region in this country when it comes to consumer confidence. We saw a 25-point leap across the 3 months to December. The main reason for that is because that region is a real agricultural hub. They've been seeing, really strong prices in terms of exports. That's really fueling the optimism that many people there have. At the other end of the spectrum, there's Otago, which is by far the most pessimistic. It's the only region to have its index, or its measure on the index, below 100, which signals contraction, and that's because of its exposure to international tourism. But look, one number that came in at the end that I thought was a real surprise was that when you look at the confidence by wage bracket, people who earned over $100,000 were the least confident, while people who earned up to $50,000 were the most confident. I wonder if this is giving fuel or weight to that old adage that with more money comes more problems. But I wonder, I didn't actually have the opportunity to ask the Westpac's economists about what might be driving that, but maybe it could be as people age, as they retire, their income's a lot more passive. But at that stage, they probably don't have the same worries that young people maybe have, those sorts of things. And in terms of what people are spending their money on, turns out we're spending a lot more money on hospitality services. One thing about lockdown is people do want to go out there, experience the nightlife, things like that. And also major household items. That time at home has maybe seen more people think about how can we improve things. Maybe it's time for a better fridge, a nicer piece of art, maybe a nice carpet on the ground.
I do find it interesting that homeowners are increasingly confident about their financial position because of the rising price of the house. Because without stating the obvious, it's not real money until you sell it.
Well, that's the thing, though. I looked at a report today from the ANZ Bank, and they were talking about property prices. And one of the things that they've talked about is that there is just this belief, and they pointed the finger a little bit here at the media, that house prices are going to continue to rise. It's driving this real FOMO culture, and everybody wants to be in the market. So I wonder if that's maybe feeding into that there a bit as well.
Yep, really interesting. Let's have a trot around the markets.
NZX down 68 points to 12,767. Our dollar is at 70.7 US cents, still hovering quite strong against the greenback. 94.1 Australian. And because of these ongoing talks in the UK, we're still quite strong against the British pounds, buying 53.04 British pence.
Wow, that is strong. Thanks, Nicholas. Nicholas Poynton there with Business.